Take a look at this.
In Ontario, the mortgage delinquency rate has jumped 90% in the past year. That's where a homeowner hasn't made a payment for at least 3 months. It's also climbed about 40% in BC and Quebec.
Those high interest rates that we've had for quite some time, although they are starting to come down now, that's still creating some additional stress.
The Bank of Canada has cut the key interest rate to 3%. Still, for more than 1 million fixed-rate mortgages that are coming up for renewal this year, that's much higher than when the loans were first signed.
You already have this widening gap, and is that going to get worse?
Some mortgage agents are urging clients to shop around and evaluate options like stretching amortization.
This is a moment to review, not put our head in the sand, and just plan, budget, know what's coming your way.
That's especially crucial as unemployment in Canada has been on the rise, and the risks of U.S. tariffs could weigh on the economy.
So I made a video a while ago talking about why your home is not the best investment. And basically, the point of that video was to just show you that if you're going to invest in real estate, especially into a home, I would always recommend something that creates another source of income before you buy a home to live in. If you have this idea of wanting to buy a home, I would recommend buying a duplex or a triplex, living in one unit and then renting out the other units. But I always recommend not to buy a home if you don't have any other source of income coming in, especially in the Ontario market, especially in some areas of Canada, because the home prices are very expensive here. And it's unfortunate, but one of the other things that a lot of people overlooked in the last few years, especially in Canada, was when the interest rates were very low, what happened was you had all these people decide to tack on more debt, right? You know, either refinance or buy bigger homes, right? Because now, because of the low interest rate with their income, they can actually just qualify for more debt. I personally didn't think that was a smart move. For those that did that, it's just because now the interest rates have went from, 1.5% to 2%, now all the way up to 4 to 6, right? And their mortgage payment has, doubled, in some cases tripled, and they clearly can't afford their homes, which is why there is a crisis right now with the mortgage payments. I think what they should have done was in a situation with low interest rates, they should have went on a shopping spree of buying multifamily buildings, buying income producing assets, right? In this scenario, they would have built up multiple sources of income. And now with that multiple sources of income, they would have then had that stability of that passive income stream coming in every month. And with that, they could have then bought, a home that they desire rather than relying on their only source of income, which is their job, right? They would now have multiple sources of income. So if you're in this situation, so I definitely recommend not to get yourself in this situation. If you're thinking about buying a home, I would always recommend, like I said, to either rent something very similar or buying something that has multiple units where you can rent out all the other units to create income. If you're in this situation, I would recommend taking a step back, potentially looking to sell that property if it doesn't make sense financially for you, renting because it will be cheaper, then eventually getting back into the market, but on the investing side. And the idea is to buy income producing assets, so then you can build your passive income stream to be able to afford the house you want to live in without relying on your one source of income. And I think for Canadians in general, they need to be very careful in the next few years on the decisions they make, because the environment is not going to be as great, and there's still going to be opportunity there, but you need to be careful and you need to be very calculated on the decisions you make.